Welcome to today's video. We're going to be jumping in right now and discussing Heikin Ashi candles for trend following. So if you don't know what trend following, it's the simple process of following the direction of the market. So for instance, when the market is going up, we want to be invested. When the market is going down, we want to get out of it or short sell, which means make money on the way down. And Heikin Ashi candles really help you identify a trend, and it's not that hard to use. So regardless of what platform you're using, I'm using TradingView.com. So I'm going to jump straight into that right now. You simply go here to the candles and you click on Heikin Ashi. And as you can see here, your candles change massively. They go from the open, high, and low candles with wicks to these kind of green and red little flowy ones. And that's the reason why it's a trend following system, because it shows you what's happening on the trend. So based on how trend works, this is what we're going to be able to see. When the candles are green, the stock is said to be in an uptrend. When the Heikin Ashi candles are red, the trend is said to be in a downtrend. So how can we use this information to exploit the market? Well, just like this. We can either use Heikin Ashi candles all by themselves, or we can combine it with indicators to set us up for success. So the first thing I want to talk about is how to use it by themselves, and then we'll get into how to use them with an indicator like a moving average. So coming here, the length of the Heikin Ashi candle shows the strength of that trend. So for instance, what we typically see here when a Heikin Ashi candle is about to reverse is we see nice strong moves, which means long candles, and then the candles start to weaken, start to slow, and then we see the large drop in the other direction. So as you can see here, red candles, a slow, smaller candles, then a big one in the opposite direction, right? We have a red candle slow down to smaller candles and a big breakout in the other direction. This is just how trend works. Trend comes down, it slows down, it consolidates in price, and then it pushes up or pushes down based on the direction of the market. So as you can see here, we can also use these with key levels, and it kind of helps show us where a stock will bounce. Now again, when we have what is called a V-shaped bounce, which was in the stock goes boom boom, we don't typically get that slowdown because it's such a fast move. You see, we go from a long red candle to a long up green candle. But anyways, that's how you can use the Heikin Ashi candles to find trend, to know if the stock is uptrending or downtrending. Now if you want to add an indicator to this, I would highly recommend you add a moving average. A moving average just shows where the stock has been. So what you can do is, this is the default. I think all brokers default to a 9-period moving average, and so now this 9-period moving average can kind of help you get out of those false breakouts, right? Because as you're seeing, this right here is an uptrend, right? It's green. But then we have these red candles, and those red candles may scare you. But when you have this line, it kind of helps you understand that, oh, we're still in an uptrend. It's still above this line. We're just having a minor pullback. Now again, something that I do want to note, the way that you see trend reflects the time frame of your chart. So if you want to see the long-term trend, what's happening overall for the company or for this stock, you want to be using the daily chart. If you're a day trader, you're going to be wanting to use the 1 minute to 5 minute chart. If you're a swing trader, the 15-minute, 30-minute, maybe even 1 hour chart, and all those trends will be different. So just make sure you're also noticing that. So if I come here to the settings of this moving average, there's two ones that are super important when watching trend, and that is the 50 as well as the 200. So 50 is going to be a bit quicker because it only looks back 50 days. So you can see here, right, when I see that this stock is moving into an uptrend because it broke above the line here with a super strong green Heikin Ashi candle. So that's like basically saying trend here, and it trends up, and then you know not to get out from these red lines until it breaks right here. So you would have a nice roughly, we can look here, 11 to 12% profit, and the Heikin Ashi candles confirm that you're in that uptrend. The second most important one is the 200-day moving average. So what we'll do, if it lets me, it's not letting me edit the code. Oh, probably leave that on. Okay, here we go. We're going to say 200. So the 200-day moving average line is regarded as the industry average for showing trend, which means that the industry knows when a stock is above the 200-day moving average that it's a bullish uptrending stock. They also know that when it's below, it's a bearish downtrending stock. So this really does show the trend, and it helps knowing that the overall trend is up, but we have these up and down minor trends inside of it being shown by the Heikin Ashi candles. And to prove that this is a strong support level, you can see how much this stock bounces off this line, right? It bounces off, bounces off, bounces off, bounces off, bounces off, bounces off, gets rejected, right? So this shows that this is a solid support and resistance line. All right, guys, I hope you enjoyed this video. If you want to learn more about who I am, about my free courses, definitely check out the links in the description. I have a free investing course, a free swing trading course. Follow me on Instagram, podcast, wherever you'd like to consume my content. All right, guys, thank you so much for watching. Please smash that subscribe button, and see you in the next video.